Very good evening, everybody. Can all of you hear my voice properly? Can everybody see the screen properly? Just give me a confirmation. Fine, guys. Great to see so many of you here. A huge attendance on a Saturday evening, more than 100 traders. So great. So I decided to organize this special session for options. And options is the exotic product. That's what I always say, the exotic. This is a product that attracts everybody. Everybody is attracted with this product here, risky product. So you have to understand what it is all about. So this class, guys, people are joining. So two kind of people in this class today. One, majority who have already done my course and but who are interested in advanced options, and other who have were hearing me for the first time. You might be on a weak connection, so if my voice is a little unclear, I'll be sending a recording of this session to everybody, so don't worry. Just focus on what I'll be talking here. My name is Yogeshwar Vashishtha. I am your instructor. I'm a trading coach. This is what I do for a living. And I teach people how to enter the stock market properly. I'm into this for more than 11 years. I used to be an engineer, then I was part of this international group of traders, learned a lot from them, then came back, started a mentoring model of my own, pathfinderstrainings.com, where more than 50 batches have passed out now. People do classes here online and on location. I teach in Andheri and in Thane in Mumbai. And today we are going to talk about options, very specialized products I'm going to talk about today. Anything that you do, there are four results. This most of you know: big loss, small profit, and big profit. So these are the four possibilities into anything that you will be going into. And when people enter the stock market, there are various routes available. What are your choices when you come to the stock market? These are your choices. When you come to the stock market, your choice number one is stocks. Then you have stock futures, index futures, stock options, index options, commodity futures, forex futures, and forex options. So today I'll be specifically talking about options. That is the product that I'll be talking about. So what is an option? An option is a derivative product which has got a limited loss and an unlimited profit potential. This is the technical definition of an option, where you have a right but not an obligation. This is what the books will tell you. You have a right, you have not an obligation. So logically, buying an option should give a lot of money to a lot of people. And when we look at the charts of options and the way options are, so they promise a lot of money. And this is what attracts majority of the people to options. For example, if I look at Nifty, the index of the market here, this is the last 5 days of Nifty. And this was a regular move in Nifty. Nifty moved from 7,700 to 8,156. So if it moves 77 points, it is a 1% move, and it moved roughly about 350 points. So about 5% is what the index moved up. So everybody is very excited, because if you are trading something like Nifty V's you had bought, you would have made a 5% in that. But if you were, let's say, into options and you went into the derivatives of Nifty and you went into the call option of Nifty of, let's say, about 7,800 call option, then the result would have been dramatic. because from 100 rupees, just in 4 days, your call option would be at 400 rupees. This is 400%. So that looks very exciting to people. Yeah, 400%, that is fantastic. But then the other thing, if I look at the other part of, instead of a 7,800 call, if you are in 7,800 put, the results would have been equally dramatic, but not on the positive side, but on the negative side. From 170 rupees, the option value would have been reduced to 37 rupees. You would have lost most of your money. So this is what this product is. It is very fast. It is very volatile. It will make you rich very fast. It will take away the money from you very fast. So, and different people have different kind of experiences with options. So today I decided, let me talk about the options the way I have seen this product. Before I tell you about the workshop that I'm going to conduct, let me talk about this product first. What are the advantages and disadvantages of this product? And different people have different kind of experiences with this product. Okay, guys, what is your experience? A lot of you have already traded some options one way or the other. What is your experience with options? Share a little with me. One trader says loss. It moves faster than futures prices. Amit says, sir, it is very complex. Then I have a lot of fear. I'm just reading what you're writing there. It is very cheap. My problem is time decay. It is good till it turns into a big loss. Sir, money disappears. That's another thing I'm hearing. I'm very confused about numbers, sir. Option strategies, I don't understand. I'm losing money in options. I never traded because of fear. It's a non-linear product. So these are the, various, I've heard selling option is high risk and high returns game. It's active only for a few days. It's very difficult to understand. And mind you, almost 70% of the people sitting in the class have already gone through my 6 months course, where I do introduce you options in the start, not on advanced levels, but in the start level. And with this kind of money that I just showed, it should have been a piece of cake for everybody. Everybody should have been able to make a lot of money, but that is not the case. And that's why option is a product that needs to be understood in a proper way. And if you understand this product in a proper way, then there can be a lot of money, in options here. So let's talk a little about options. Let me go a little more. So we'll focus on options. Why should you trade options? Let's look at options. The way it is different from other products. All other products are only based on direction, whether it is a stock. Stock can be traded only in upward directions. Futures can be traded in both the directions. The greatest advantage with option is it is a multi-dimensional product. And you can make money into options in 3 ways. You can make money into this through direction. You can make money in this through time. And you can make money in this through volatility. Direction is available in other products also. But time and volatility is not available in other products. It's available only in options. And depending on how you trade, time can here be your best friend or it can be your worst enemy. Volatility is another great factor that can be used in options, where increase or decrease in volatility can help you to make a lot of money, whether the move in direction helps or not. In fact, options can be taken to the levels where you can create strategies which are directional neutral. What is directional neutral strategies? Directional neutral strategies are where you can make money no matter if the price is going up or down. One side cancels other side. So you neutralize the direction and make money only from time and volatility. This option is not available either in stocks or in futures. This option is available only in options, and where you can make money through three things: direction, time, and volatility. Other advantages with options is it has a greater cost efficiency. When you buy options, you're only paying premiums. This is the best part. When you buy options, you pay only the premium. It is very cheap. Let's say if I go here, let's say I go in this market watch of BPCL. Let's say you want to buy BPCL. 600 stocks of BPCL if you want to buy. It will cost you about 6 lakh rupees. But if you buy the same number of stocks in the options market, they will cost you maybe 2% or 3% of that money and will give you the full advantage of the full move of BPCL of the full 600 stocks. So this is another great advantage with options, that they have great, cost efficiency. Great cost efficiency with very less money. You can trade a big amount, and because of that, they have got a property called leverage. And leverage here, let's take an example. Let's take example here. Let's say I take a stock like LT. This is a stock that has moved nicely up. Let's answer Pradeep here. Larsen and Toubro came up with a very decent result this time, and it jumped up. It has rallied up on the upper side here. Let's keep it clean. It has rallied up on the upper side here and moved up. Now, those who are trained under me, you know, Larsen and Toubro is fundamentally a weak stock. One quarter doesn't mean anything. And it has moved up with two novice gaps. So with two novice gaps, and let's say, and if I look at this, we see it is, I'm doing my regular Fibonacci analysis on this. And I see this is coming on a 50% retracement level, which might lead it back to, moving on. Now, let's say you have formed a view. Let's take it. You have formed a view that from here, it has formed a doji candle now. It had two expanded range candles, and now it has formed a doji. And there's a possibility that it might come down and fill the gap. Let's say somewhere here, it has filled the gap here. So you decide to take a trade. So you have two choices. Your choice number one is futures, of course. But futures have unlimited profit and unlimited loss. You assume it will come down. It might move and go to 1700. So that way you have the possibility of this profit, but you also have the possibility of a big loss. So in this case, you can go to options. And there are three kinds of options which are, out of money, in the money, and on the money. And since you're trading a view, let's say you choose, say I want to trade 1400 or let's say 1350 strike price. Rajesh, I'll be sending a recording. I can't do anything on a sound issue here because from my end it is going fine. But I promise I'll be sending a recording of this to everybody. So in that case, what I can do is, instead of going into futures, and in stocks, तो मेरे लिए useless है. In stocks, it is useless because stocks, the property of the stocks is you cannot make any money in them when the price is going down. So I go to an option and I say I choose here the lot size of LNT. Let's say I see here in derivatives in LT, and I say I want to buy puts of, let's say, 1350 is the put. And you see the 1350 put is available for just 10 rupees. It's available for 10 rupees. So what is your cost of acquiring this contract? Your cost of acquiring this contract is just, 600 into 10, which is, 600 into 10, just 6,000 rupees. This is the lot size. If you want to buy this one with a lot size of 300 is 3,000 rupees. That's the lot size in this. 600 was BPCL. So this is also your worst case scenario. In a worst case scenario, you will lose 3,000 rupees. But if it goes down and by the end of the month it fills this gap, the reward is high. If it comes down and fills this gap, the reward is very big, right from 1350, almost to 1250, 100 rupees, which is about 30,000 rupees. So if you are right on your view, you gain 30,000 and your worst case scenario is 3,000 rupees. You can also go into the in the money options, which are a little expensive. And they can also give you limited risk. So it's an automatic risk management built into this product, which is not built in other products. This is the only product where you can choose not to put a stop loss. I remember just a live trading day, which happened on Thursday. At about 12:45, those who are into this session, we bought a call option at 11 rupees. 11 rupees we bought a call option. Nifty rallied up. And anybody remembers by the end of the day, in just 3-4 hours, where did it close? I remember the price. 68 rupees. Fantastic, Bijoy. This is where it closed. 68 rupees. What was my worst case scenario? With a lot size of 75, my worst case scenario was 750 rupees. And the percentage profit, all of you got, and I also got on that, was very close to about 500%. So this is another great advantage of this product, is that it has got a limited loss, unlimited profit potential. But here is the catch. The catch is, if you analyze the markets are trending almost just 40% of the time, and 60% of the time, the market remains in a sideways trend. In a sideways trend, buying an option is useless because options premium consists of two components. One is time value, other is money value. Money value moves up and down as the price moves up and down, and time value reduces every day as time to expiry becomes less. And that means when you are buying options, your timing has to be perfect because you are giving a target. You're paying less premium, but you are paying premium which will evaporate. For example, if you buy this LNT or this LNT put option I buy, and if nothing happens, every day the premium will reduce. Who gets this premium? The premium that you buy anything for, let's you buy a BPCL 900 call for 121. Who gets this premium? It doesn't go to the stock exchange or it doesn't go to FII. It goes to another trader like you and me who has written this option, the option writer. And option writers makes the most money. since most of the time the market remains listless and sideways, the market doesn't catch trend. If you see in this stock here, look at this stock. It was sideways, 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 and then it caught a trend. If you look at the way the stock goes sideways, sideways, then it catches the trend. Sideways, sideways, catches the trend. This trend. So most of the time, the price 50% of the time is sideways, 50% of the time the price is in trends. That means if you have to make money into options, you not only have to learn how to be an option buyer, you also have to learn how to be an option seller. So you should be both an option buyer and an option seller. Now, option seller, what is the profile of the option seller? Option seller has got limited profit, unlimited loss. The moment you hear this term, you're so scared, you never want to be an option writer. But the fact is, option writers actually make most money risk-free. And this is what, options are all about. They're exotic product. And if you learn both how to be option buyer or how to be option seller, you can make money in both the direction. Let's go further now. So it has got a greater cost efficiency. It has got very less risk when you are an option buyer, but it has got a huge risk when you are an option seller, an option writer. What if you learn both? What if you can learn when to be an option writer and when to be an option seller? Then you have the best of both. For an option buyer, time is the biggest enemy because it erodes every day. But for an option writer, time is the biggest friend. Volatility is a great friend for option. And these two, other factors are not there in stocks or futures. So that's why option is called a three-dimensional product. It has got three dimensions. It has got the price, the time decay, and the volatility. Three components of there. And since your capital requirement in options is very less, it has got higher potential returns. Higher potential returns. There are more strategic alternatives. And since this particular product has got three components, price, time, and volatility. Plus, there is also one more component, interest rates, not so important. This particular product can have multiple strategies that can be, deployed here. In fact, if you decide I want to have limited profits, you can create strategies here. You can create where making a 5 to 10% a month is almost as guaranteed as the FD in a bank. I'll show you some of my screenshots as the session goes on. Very recent trades. I had taken some a few option neutral trades while I was on a vacation. I had initiated those trades, and since I was on vacation, I had no access to charts. So they were just directional neutral strategies where, and I will show you what kind of money, they are not intraday. And this is another great thing about the directional neutral strategies that you can make in options is that they are not intraday. They are swing. You don't have to bother about your missing your office or missing those meetings, and you can just let the time decay and the volatility give you money on an everyday basis. Because, but there, when you're an option writer, you're not looking for a 300, 400% profit. Then you're very happy with 5% profit a month, but very guaranteed. It will come to you almost for sure. And this is the conflict that comes, because most people, when they look at options, they only want doubling the money. Sir, 3 दिन में double karao. But it will not be in trend all the time. It will lose time value. Volatility will differ. And option is a very, very mathematical product. Another property of options is it is very, very mathematical product here. And Okay, I'll use less. There's a lot of people from South here, guys. Sorry. I'll use more Hindi. And even if I want to speak in Hindi, I'll speak in English. So those who are Hindi comfortable, whenever I'm speaking English, please imagine I'm speaking in Hindi. Thank you. Okay, you're welcome, please. So here, so it's a great cost efficiency, less risk, higher profit potential, more strategy alternatives, and you can make risk-free profits in this. So how can you make risk-free? Let me show you an example of this risk-free profit. And I've taken screenshots in my account. I have a options trading room also where every Friday I only trade strategies. So where this is for people who want to seriously, become option writers and options buyers both at the same time. So this is, let's see here, a trading capital of about 2 lakh rupees, directional neutral strategies means in Nifty, Bank Nifty and stocks. Trading duration ranging from 1 day to 3 days roughly. That is, so let's see this. I'll make it bigger. See here, this is it. So here, a 1200 rupees of profit. Direction, I don't care where the market goes. 13,000 rupees of profit on 17th May. 19th May, 7,000 rupees of profit. These are all options and directional neutral means, and I'm in all of them, I'm option writer. I'm not an option buyer. I'm assuming unlimited loss, limited risk, profile, but you can hedge it. I'll teach you how to hedge it so that it doesn't really matter. A profit of 4,700 rupees and another directional neutral strategy by, being an option writer. In none of them I'm an option buyer. In all of them I'm an option writer. And this is the summary. Just 1 week of trading, guys. Day 1, 1,200 rupees. Day 2, 13,000 rupees. Day 3, 7,000 rupees. Day 4, 4,700 rupees spread over a period. Total profit of 25,900 rupees. Screenshots I have shown you. That is 12% in a week, risk-free. This was a result season. In a result season, you will always earn more. Capital of about 2 lakh rupees, Prashad. In a result season, you will earn more because volatility is high. In other, you will earn a little less. So 12% in a week comes to about 48% in a month. But since I had taken most of the trades in the last week of the expiry, it was expiry week. So my time decay volatility calculations were entirely different. Normally what you can make is very close to about 3% a week, 3 to 5% a week, risk-free is very much possible. And there are a lot of, possibilities that are available here. So see, let me show them again to you. And here I'm not bothered. Since I'm traveling, I'm on a holiday, I can look at the market. So here, I am not bothered about the direction. Since one direction is hedged by another direction, so I cannot ever make money through direction here. The only way I can make money is through time values and through the volatility. But there you should know mathematical calculation. ऐसा नहीं कि कुछ भी लेके रख दिया. You should have mathematical calculations that you should understand, and then, this kind of money, yeah, you can trade. See, it's not charts here. When you come to being an option writer, charts are not of much use. It is mathematical calculations that you should be knowing. Being an option buyer, charts are great. Being an option writer, it is more of the mathematics and the calculations that are involved. Yeah, you have to learn the Greeks, the beta, gamma, rho. You have to learn of them. For example, if I go here and I look at this LNT and I go here and I go to the option calculator, so I'm thrown a lot of values here. Delta, theta, gamma, vega, rho, day to expert, volatility, dividend yield. And this is different for every stock, is different for every strike price. So how do you make sense of this? If you cannot make sense of this, you cannot be an option writer or you cannot be an option buyer. And since options are a mathematical product, they work on entirely different ways. So you have to learn this. This is what I teach in my advanced option class. That how will you use all those mathematical calculations, devise different strategies and work on them. When to be an option writer, when to be an option, options have great advantages. You have a portfolio, because in my trading room, I help you guys build portfolios now. What if you have to hedge your portfolio? Portfolio की value कम है तो इतना tension नहीं आता है, but eventually your portfolios will grow big, 10 lakhs and above. Then you need to learn how to hedge your portfolios when bearish trends start. You cannot all the time sell your stocks and get out. So in that case, hedging becomes a great strategy to learn. How to hedge, kitne lot se hedge karna hai, in the money se hedge karna hai, should I be hedging with the out of money? So all those you should be learning and knowing. And that is, another thing that you should be making on hedging your portfolios. That is another great advantage of trading options and learning how to trade options, being both an option buyer and an option writer. So limited loss, unlimited profit, high leverage, quick profit, quick loss. These are the properties of options that you can go for. So you have to learn, if you want to enter into the arena of options, you have to learn to be both an option buyer and an option seller. You should learn strategies where without doing any intraday trading, you can make 5 to 10% risk-free. Absolutely, totally risk-free you should be able to make. 5% a month is absolutely not difficult at all. And 5% a month is good money. How many of you like to earn 5% a month risk-free? To hell with where it goes. You say, I'm not interested in, sir, any doubling money every month. 5% a month is good enough for me. By bothering, कौन देखता फिरेगा ये ऊपर जा रहा है, नीचे जा रहा है, if I can make it risk-free, then I'm more than happy with this. Yeah, that gives about 50-60% a year. And that's why you should learn to be an option writer. And when people are going into futures, isn't future an unlimited loss product? Isn't stock an unlimited loss product? Everything is an unlimited loss product if you don't working into this. And that's why somehow option writer को बहुत खराब नाम दे दिया गया. No, he's also working on the same logic. When you are an option writer, you are basically trading something like a derivatives with two additional components to your advantage. One is time, other is volatility. And that's how, I have devised this course. This options I teach very brief in my 6 months course, and then advanced course I go for. And now since I have students from all over India now, and people from outside are coming, so it is not fair that all my courses are held only in Thane. It's not fair on my part. So I have decided to, introduce online courses in options now. I have not done any online course in options so far, but now on popular demand, I am starting doing online courses in options. I will not go for any physical courses anymore. I'll go for online courses in options now so that everybody from all the places can participate into it. This course that I'll be going for, this would be a 2 months course which will cover options right from the scratch zero all the way to the end. You'll be introduced to options, then how to double your money in a day, that is when you're an option buyer, telling how the derivative market works. Another great advantage of options is, since most of the big players of the world, the FIIs, the DIIs, they work on options basically. So option data gives you a great insight in addition to the charts as to where the market is going. So it will help you into your stock trading also and in your future trading also. And since they are mathematical, so then you have 3 things to work on. You know the fundamental analysis, you know the technical analysis, and you know the option analysis. And once you know all 3, when you're looking at fundamental analysis, you are looking from a business performance point of view. When you're looking at technical analysis, you're looking from a charting point of view. And when you're looking at option numbers, then you are looking from numbers point of view, where numbers are telling you where the market is likely to go. So you can find out the direction of the market just by looking at the option numbers. Then advantage up now, options are starting in commodities, also in forex already options are there. Advantages of options trader over stocks and futures, the language of options I'll be teaching, understanding time decays, how to prepare option payoff diagrams. Option payoff diagrams are very, very important. Using technical analysis to trade options, how to use fundamental analysis to trade options, what are the various pricing models, implied volatility and the open interest, the various Greeks, how to calculate them, how to use them to make money, risk considerations and management I'll be teaching, using software to analyze option, then various option. I'll be teaching in this at least 20 option strategies, not only one, 20 very high probability option strategies I'll be teaching you so that you are prepared for the market, whether it is going up, whether it is going down, whether it is going sideways. Even when the market goes sideways, there is a low volatility sideways and there is a high volatility sideways. And there are different kind of strategies in those different kind of conditions, volatility spreads, what are the bulls and bear spreads, when should you be writing options, when you should be buying options, and how you will mix both. Then how do you hedge with options here? So all this, then volatility, what is volatility index, how to use it, how to trade stock options, index options, forex option, and now commodity options is also coming. So we'll be learning that also. So this is right from very basic to a very advanced course. This is a 2-month course, which I have divided into 2 parts. Okay. First is 3 days of, training. It will be Saturday, Sunday, Monday, 11th of June it is starting. So Saturday, Sunday and Monday, 3 days of online training will be there, 9 o'clock in the morning till 5 o'clock in the evening. On Saturday and Sunday, 2 days, I'll be giving you the concept, methods, everything. And on Monday, I'll show you how to do live trading in options. So 3 days of condensed training, practical training will be given. After that, there would be 8 sessions. There would be spread over 2 months, 11 to 12 in the afternoon. There would be 8 sessions with recordings. These sessions will be given to you. And in these sessions, I will be live trading the strategies. And you can also trade with me. And here I'll tell you how will you analyze options and how will you trade options in live markets here. So 3 months of, it will be every Friday. Every Friday 11 to 12, because Friday here is, Friday is the best day for strategies because you have 2 days of holidays. So Friday is a great day where you can execute a strategy, then relax and have a holiday, and Monday book your profits. So that is a great way to move into this. So after the training, this is what you can expect. You will learn how to trade options directionally, properly in detail. You will be able to execute the advanced option strategies. A lot of strategies, about 20 strategies I'll be teaching you. I'll teach you how to hedge your portfolio, so you'll learn that. You will learn how to earn money by selling time, by being an option writer. You will learn how to earn money by trading volatility, by being both an option writer and option buyer. How to earn 20% a month with proper risk management, and how to earn 5 to 10% a month risk-free by just being an option writer and finding out opportunities here. So this is what this course aims you to do. What are you expected to know? You are expected to be good with technical analysis. You should, I don't want, because there are many people here who are not my students, they are attending this. If you do not know technical analysis properly, then, this course would be difficult for you. But if you know, all my students know, so for you it is easy. But those who are not my students, and if you want to do this course, the prerequisite is you should know technical analysis. If you don't know technical analysis, you can join my regular course first here. Okay. Those who are in the midst of the 6 months course, you can do that, guys. That's not, you can do that. Anybody who has done the first 4 days and who are into the 6 month sessions, you are eligible and you are